What's going on? What's going on? Oh, my bad. Hold up. Wait a minute. There we go. Hey, I don't know what I did. Well, I know what I did, what I didn't do. I wasn't prepared, but it's okay. I'm here. Happy Tuesday. Terrific Tuesday. Happy Tuesday, y'all. Let me go ahead and do my spiel. As I am doing my spiel, I want to say thank you so very much to everyone who is tuning in, chiming in, jumping in right now live. I see y'all on TikTok. I appreciate you. And then anyone that is tuning in, y'all haven't got here yet, but when you come in, I see. There we go. Hey, what's going on? Go ahead right now as I'm doing the sharing and whatnot on TikTok. Go ahead right now and let me know where you're tuning in from. Put your city, put your state, put your country. If you're not residing in the United States, go ahead and put that in there as well. So that way I know where you're tuning in from. I appreciate you. Okay, so for my people who are not aware of who I am and why I am here, my name is Leona Clark. I reside in the state of Louisiana. I am a mom. I am a wife. I am an Army veteran. I'm an entrepreneur. I'm all those things above. Okay, all those little titles. I am those titles. Okay. Hey, what's going on, sis? Hello. I am Shanae. Thank you so very much for grabbing your heartbeat. So I know normally on Tuesday nights I go live about crypto specifically, but because I have been getting a ton of questions about things that I talk about outside of cryptocurrency as an investor myself, I wanted to make sure that I came on tonight instead of during the daytime. I come on tonight and share that. So I've done this pretty much kind of given this information before, but it's phrased in a different way for the people who have never ever heard me speak on these things before. Thank you so very much for the roses. I appreciate you. I am Shanae. Okay, so as you all are coming in, what I ask you do on YouTube, give the thumbs up. Okay. If you have not subscribed to this channel yet, I would ask that you go ahead and subscribe, especially if you've been here a few times. Okay. I can see the numbers. All right. So you can go ahead and subscribe. And then if you are not part of the Prosperity Cause community, what I ask you to do is hit the notification bell so you know when I am live. Okay. That's for y'all on YouTube. On TikTok, the I am Shanae is already doing it. She hit that share button a few times and liking the live. I appreciate that. So what we want to do is get more people in here. So all of y'all that are jumping in, if you peeking in from the FYP, I can see you. TikTok tails on you up here. Okay. Go ahead, tap the screen a few times. Just tap, tap, tap real quick. What that does is tell the algorithm that there are people interested in what we're going to talk about. I couldn't, for whatever reason, the option didn't come up for me to change this board. I'm not talking about Richest Man in Babylon tonight. However, I am talking about 4 keys to grow and protect your money in 2026. I understand that normally on Tuesday nights, I talk about crypto and I do crypto 101, but because of the feedback I'm getting, I'm like, you know what? I'll do crypto 101 on Thursday night anyway. I want to go ahead and talk about this because there are people who need the information who do not know how to, they don't even know how money works. They don't have a money system. They have a money system. Let me bake that up. They have a money system, but the money system they have is not working for them right now. It's not working in their favor. It's actually hurting them. And so what I'm going to be talking about tonight is a way to create a money system that is going to work in your favor. So that way at the end of 2026, you should be able to say, you know what? I'm proud of myself because I did that. All right, that is the goal. This is a safe space, y'all. So don't feel like you have to have everything figured out. You don't have to have make all the decisions tonight. Tonight is all about raising awareness, seeing where you are, okay, and then establishing where you want to be, and we're gonna fill in the gap, okay. So you know where you are today, you know where you want to go, you have an idea of where you want to be, at least by the end of the year, and we're gonna fill in that gap tonight. That is the goal, okay. So as you all are coming in, go ahead and tap, tap, tap it up, tap, tap, tap it up, tap the screen. For whatever reason, I'm not seeing stuff. Like it's weird. It's froze or something. So hopefully y'all can still hear me on TikTok. If y'all can't hear me, then give me the thumbs up. Okay, there you go. I see it. So maybe it's a little delay again. Water is life. Thank you so very much. Welcome. And I appreciate you for liking the live. Okay. I am Shanae said I can hear. Okay, cool, cool. All right. So for those of you that have never ever been on my lives before, thank you so very much. You could be doing anything. Said TikTok has been delayed today. I figured that because I'm like, that's weird. Like I can't see. I see the people, but it's not showing me anything. Like I can see the numbers, but I'm not seeing the people coming in, so I can't welcome anybody in, which is weird. But I got it. So if y'all need me to repeat something, please on TikTok let me know since it is a delay, okay? And I will do my best. If I ask a question, I'll wait. I'll give a bit of a longer pause than I normally do since it is a bit of a delay on the app, okay? So keep tapping the screen, y'all. Tap, tap, tap. If you have not followed me yet and you're like, I need to get to know you, Leona, that's cool. You can also hit the repost instead of share. That does the same thing to the algorithm on TikTok. It lets the algorithm know that people are interested in this live stream, okay? So that's going to send it out to the FYP. So if what I share with you in the next, let's say 10 minutes, you're like, oh, okay, yeah, go ahead, hit repost, okay? Hit repost and then possibly grab your heart meet, follow all that good stuff, and then the goals are right here. This is what we're focusing on TikTok. All right, so thank you all so very much on YouTube. Hey, thank you so very much for being here. I really appreciate y'all. If you're watching a replay, I still want to say thank you because you could be doing anything. You could be watching anyone else's profile, pages, live streams, replays, all of that stuff, but you're watching mine right now. So I appreciate that. Okay. If you have been curious about how in the world can I get my money to work for me, because I'm seeing all of this stuff. I'm hearing all of this stuff, but what I'm doing is not working. Like I'm not where I want to be. Okay, I've been doing these things for the past 5 years and it has not gotten me to where I want to be. Guess what? You're in the right room. You're in the right room. We're about to fill in the gaps, okay? Tonight, y'all, is not about knowing everything or just doing everything tonight or this week. No, okay? It's not about becoming a financial expert overnight either. Cool? Let's make sure we're clear on that. This is a safe space. If you feel like you want to chime in and say, yep, that made sense, I was doing that or whatever, that is perfectly fine, okay? Because what we want to do, well, what I want to do tonight is help you to have money start to make a bit more sense. Okay. That's what I want to do because I don't want to pressure you into doing anything. No, 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 no. I want you to have your eyes open. Like, oh, I can see clearly now the rain is gone. I can't sing, so don't judge me, okay? But anyway, tonight the focus is building structure. We want to build a simple structure, a repeatable structure, the kind of structure that helps money finally make sense. All right. So if you are ready to get that structure, if you're ready for your eyes to be open, like, oh, I'm ready to go. If you are ready, I want you to type ready in the chat, or if you're watching the replay, you can type ready because I do respond to comments left on my videos. Okay. So I'm not gonna, try to overdo it with the information. I don't want to bombard you with stuff. So that's why I say it's going to be 4 things that we're going to talk about today. And it's going to pretty much help you build a foundation, one that you can actually start to build yourself. You can use it, you can tailor it to yourself, your situation, your future, all of that good stuff. Okay. So by the end of this live stream, by the end of this webinar, the goal is for you to understand why in the past or today investing has felt or is feeling confusing. Okay. How to organize your financial life. Like I said, fill in the gaps from where you are today, where you want to be by the end of the year. We want to fill in those gaps. Okay. And then as a beginner, as an investor, okay, as a person that is starting to invest or starting to create a money system or wanting to create a money system that's going to work for them, I want you to be able to understand what you should focus on first. Okay. And then I'm going to give you some next steps. So that way, within the next 30 some odd days or whatnot, or actually by the end of this month, you should say, oh, you know what? This is what I've been doing all month. Okay. For the month of February, these are the things I've been doing. All right. So if you can stay present, the entire time, everything will connect. If you say, Leona, I can't stay the whole time because I'm getting the kids ready, I'm cooking dinner, I'm at work. I'm just jumping in for a second. Okay. If that's you, give me the thumbs up emoji in the chat. If that's you, give me a thumbs up emoji in the chat, especially on YouTube. Give me a thumbs up emoji in the chat if that's you. If you're like, Leona, I want to be here the whole time, but I can't be here the whole time. So I need you to just give me a minute. Is there a way, Brown Sugar, welcome. Is there a way for me to watch a replay? It absolutely is. I'm on YouTube right now. The replay will be up for a limited time, but it's going to be up. All right. And this is Prosperity Calls, okay, on YouTube. So if you can't watch the whole live stream because you have stuff going on, you're a parent, your spouse, whatever, you at work, whatever it is, you say, listen to Star Major or drop it, give me 50. You better tell them, Saga City. You better let them know it's time to listen up, okay? So yeah. I ask that you go and tune into the replay if you can't watch the whole live stream. Okay, it's no big deal because I know we all have stuff going on in life. All right, so that's what I'm going to ask you to do. All right, so what I'm going to do for y'all on YouTube, I'm about to add. Hold up. Oh no, that's not what I was trying to do. I'm trying to add the thing back up. What is going on? Why can I not add it? I had it up here just a second ago. There you go. All right. So tonight, I want you all to be prepared. Here's what we're going to be doing. Okay. We're going to start with what to expect tonight. Okay, so my folks on TikTok, again, y'all, as you're coming in, tap the screen. I know it's a delay on TikTok and it's frustrating. As a matter of fact, I'm going to close it out and come back on and see if that helps, maybe, because I'm not even seeing when the people are coming in like consistently. So it's pretty weird, and that's not normal for my live streams. Like I can't see. So can y'all still hear me? Give me a thumbs up if y'all can still hear me, because maybe it's just a very bad delay. And maybe I need to close it out and come back in. Or y'all could jump on YouTube. And then I could just focus on one platform. Let me know. Can y'all hear me just fine on TikTok? Thumbs up emoji in the chat if y'all can hear me. Let me know. That's what I'm saying. Like, by now, I should have saw something. So that means it's a really bad lag or delay. Weird. Manish, welcome. Happy Tuesday. Yeah, see, it's still, I haven't seen anything. That's weird. I'm gonna just keep going. Because I don't want to close it out and then come back on and then it's not working. If it's an issue, if it's really bad on TikTok, y'all, you can jump on YouTube. It's Prosperity Calls on YouTube. Or you can click the link underneath my name and then it has it on there. So you go straight to my YouTube channel. Okay. And that's Prosperity Calls on YouTube. You can jump over here. All right. So tonight, here's what you can expect tonight. All right. There won't be any rush on financial decision making tonight. All right. I understand that a lot of people have a whole lot going on, and you got 20 million things on your mind that you're doing. You have to make decisions on. I'm well aware that there's a such thing as decision fatigue. I have actually experienced that before. And it was early on in the day too, y'all. And I was just sitting here like, I'm tired. I had to go lay down. My brain was that tired because I had been making decisions. And it's not like little decisions. It was like little decisions on top of really big decisions. And it was just too much for me in that short amount of time. And I was just so tired. Like I felt really drained. So that's why I don't want you to make any decisions tonight. Okay? No decisions tonight. Just receive the information, take notes, okay? And then give yourself, welcome Danny, happy Tuesday. Give yourself some time to process the information, and then you can start taking your time about making some decisions, okay? Here's another thing you can expect from me tonight. Y'all, I'm going to be straightforward with the conversation. Thank you, Danny, for liking the live. I'm going to be straightforward with the conversation. I don't do that sugarcoating and that woo, 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 and all that stuff. Like, I've been watching Living Single, y'all, so forgive me. I've been on my Sinclair, right now. Thank you so very much for liking the live. But I'm gonna give it to you straight because that's how I like people to give me information. Okay, if it's a challenge and I've seen that it's a challenge, I'm gonna let you know this was a challenge for me. I'm not saying it's gonna be a challenge for you. I'm saying this was a challenge for me. Okay, so you have a heads up. All right. Also, you're gonna get some clear next steps after this session. So once we're finished with this particular live stream, you're now going to have steps on what you should do. Not necessarily homework, okay? Because you could choose to do it or not do it. So I'm just going to give you those steps. And here's why I'm going to give you those steps. And here's why I'm doing this type of live tonight. Okay. Because Tuesdays is normally focused specifically on crypto. But the reason why I wanted to talk about these 4 keys to grow and protect your money in 2026 is because a lot of us were not taught how money works. If you were taught how money works, if you were taught about credit, if you were taught about how to protect your money, how to grow it, if you were taught about investing, if you were taught about real estate, if you were taught about all of this stuff before you became an adult, give me the thumbs up emoji in the chat if you can. If you were taught about money, like you knew how money worked, you knew how money flowed, you knew how to make your money grow, you knew all of this stuff, you knew how to secure and protect and preserve your money. If you knew all of that stuff before you became an adult, give me the thumbs up emoji in the chat. Now, if you're like me and you didn't know those things because you weren't taught in school, you weren't taught at home, you definitely weren't taught in a way that prepares you for today's economy, I want you to give me the thumbs down emoji in the chat. Okay? Give me the thumbs down emoji in the chat. I know TikTok is a bit of a delay, so I'm attempting to give y'all a second. Okay? Or pause a little bit longer for y'all. All right? Here's what I want you all to know. Okay? Wealth was not built. Wealth isn't built by knowing everything. Okay, it's built by following the right order, and that, y'all, is the point of tonight's live stream. Okay, that's the point of what I'm talking about tonight. Okay, so we're gonna move on to me. For those of you that are just tuning in, okay, on TikTok and on YouTube. All right. Like I said, I'm a wife, I'm a mom, I'm an Army veteran. I am bringing 20 years, y'all, of military experience from the Army because I want to be specific because I know people are going to ask, what branch, which branch? I was active duty Army for over 20 years, a little over 20 years. Okay. But I'm bringing that 20 years of experience to the financial educational space for the past close to 6 years. Okay. I'm a full-time trader. I'm a full-time investor. All right. That balances family. That balances personal development because I'm a student always. Right. That balances entrepreneurship every single day. So I want to encourage you, if I could do it, a kid from the projects, a kid from a single parent home, grandma raising me and my older brother, right? Military, no financial background. No, I didn't go to college for finance, economics, and business management, and none of that. Okay. If I can do this, y'all, I'm telling you now, you can do it too. All right. So now that this is done, we're going to talk about the topics for tonight. Why investing feels confusing. We're going to touch on that. Okay. Thank you. Perfect. We're going to talk about 4 pillars of wealth evolution. That's these 4 keys that I'm talking about for us to grow and protect our money, right? And then I'm going to talk about some things that you as a beginner could do, should do next, okay? And that's totally up to you. And if you have any questions, by all means, you can type your questions in the chat pertaining to what we're talking about tonight, okay? Now, let's run it. So let's talk about why investing feels confusing. I'm going to start with the truth. If investing feels confusing or has felt confusing, it's not because you're behind. I want to be perfectly clear on that. It's not because you're behind, y'all. It's because we weren't taught this type of stuff, let alone taught it in an order that makes sense to us to properly execute. Okay? Think about it. School taught us how to earn money, right or wrong. When you went to school, you were taught how to follow directions. You're going to do X, Y, and Z. You're taught what to think, not how to think. You're taught how to earn money, but you're not taught before you become an adult in school, you're not taught how to manage it. So they expect you to know how to go out here and be a good employee. Thank you, Emma, for the follow. They show you how to go out here and be a really good employee. But what they don't show you is how to manage the money that you earn. Social media, which is what we're on right now. TikTok, hey. Okay. Social media shows us the results. Y'all notice how not all, but the vast majority of influencers, people that in the finance space, like myself, the vast majority of them either show or talk about the end result. They tell you what you should invest in. They tell you how to invest in, like, okay, use these brokerages, use these platforms, da 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 da. They tell you when you should be buying. Look for these things to buy. They may not go into every bit of detail, but they tell you, oh, look for this to happen for you to buy. They even say, oh, you should have been selling because da 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 da, right? But what they don't tell you is when you make this money, these are some of the things that you should be doing to protect the money that you are accumulating, that you're earning. So when you get into these markets and you start investing and you're successful as an investor, the reason why some people end up making 6 figures and still living paycheck to paycheck, making 7 figures, $1 million plus, and still living paycheck to paycheck is because, one, they may have some financial trauma. Two, they don't understand how to protect the money that they have. Their money systems are not set up properly. Okay? Y'all, it's too many people today. This is just from my observation. This is why I speak and I talk about the things that I talk about, the way that I talk about them, right? It's because there's too many people that starting mid-conversation. Tarot, welcome, right? They started mid-conversation. Like, dog, what are you talking about? You telling me that I should be buying this, but man, I'm sitting here up to here in debt. I'm over here living paycheck. I'm not talking about myself, but I'm just saying, using it as an example, like I'm over here living paycheck to paycheck. What you talking about? You telling me I should be investing 10% at a bare minimum of my income? Man, I ain't got 10% to invest. How is a person going to invest if they don't even have 10%, but you're telling them they should at least be investing 10% of their income? No. You got one person, like Leona, talking about crypto, or other people that you learn about crypto from, right? You got these people over here talking about crypto. You got these other people over here talking about stock market. You got these other people over here talking about real estate. Then you got these other people over here talking about, hey, you need to start a business right now. If you're struggling, if you're not financially free right now, if you're living paycheck to paycheck, you should be starting a business. Wait, what? New way. Thank you so very much. Welcome. Okay. But this is something I have noticed. This is just from my lens, my perspective. Something I have noticed. I'm not going to say no one, but the percentage is small of the content that I consume. The percentage is small of when they explain where a beginner fits in. So naturally, people feel stuck. They're like, it's too much. It's information overload. And then what happens? Decision paralysis. They're like, I can't make a decision. So I just keep doing what I know is not working for me, but it's because it's just too much. I don't know where to start. I'm afraid to make the wrong move because what if I do this and then I lose my money? Anybody relate to that? Anything I just said, does anybody relate to anything I just said? Right? You're not alone. I'm saying all of this because you're not alone. Been there, done that. Right? Been there, done that. I feel you because I've been there. Talk here, say, yep, there we go. Okay? I've been there. But here's what I want everybody to know. Today, I want you to feel comfortable with financial illiteracy not being personal. Y'all, it's systemic. It's systemic. The government, leaders, all of these people know that money controls, in a sense, or it plays a part. Let me say this instead. Money plays a huge role in the type of healthcare you receive, in the type of education you receive. It even plays a role in what type of jobs you have, right? It plays a role in the type of experiences you have in life. So if everybody knows this, that are in positions to change the way that we learn, and they do nothing about it, guess what? That's a system problem. That's not a you problem. You didn't do that. Okay. So I want to make sure that you don't feel like it's my fault, it's my fault, it's my. Do we play a part in things today as adults? Especially if you're, up there with me. I'm 43, right? So if you're up there with me, you might feel a bit like, but I should be further along because I'm 43. I hear you. But again, it's a system problem. That's why we have to have these conversations. And we need to feel comfortable going into spaces that make us feel safe. But we get to the point where we feel comfortable having these type of conversations. So even though we may be a bit more mature, right? We may have been here a little longer than some, right? We can have the conversation without the anxiety, without the frustration, without the fear of being judged. Because truth be told, most people that are trying to invest before they even understand their cash flow. But again, they don't know. You don't know what you don't know. But I do want to tell you, if that is you, okay, just think about this. And I said this to a couple of people the other day, but I was like, that's kind of like decorating the house before the foundation is built and solid. Before the foundation is even poured, like it's like you already got everything. No, you can't do that. Okay. But I want to tell you, nothing is wrong with you, y'all. Okay, it's not nothing wrong with you because this is a system problem. What we're going to do tonight is talk about structure. So we're going to go into, for my people on YouTube, here you go. Okay, we're going to talk about the wealth evolution pillars. All right, this is prosperity calls. This is based on the things that I have learned, the things I have experienced, the things that I have been taught and applied. Okay, this is where I got a Carlene, welcome. Happy Tuesday, right? These are the things that I have experienced. All right. So I've made mistakes. I've gotten out of debt, got back into debt, and then got out of debt again. Right. I've done that. I've made money, more money than I was making just from being in the military because I trade, right? I've made more money because I didn't have a great money system set up. I was still living paycheck to paycheck because I was blowing the money. Sundust, Star, welcome. Happy Tuesday, right? So I'm speaking from personal experience as well as the conversations that I've had with people who have trusted me to help them. Okay, they've come to me for advice. They've come to me seeking clarity, better understanding of how they can go from point A to point B to point C. Everybody got it? So I want to be clear on this. There's 4 pillars that I'm going to give y'all that wealth evolves through. Okay. Now, I want to be clear on this too. You don't have to master them all at once. The goal is for you to build through them. Everybody got it? Okay. So we're going to talk about all 4 of them tonight. We're going to talk about all 4 of them tonight. But right now, I want to give you those 4. So that way, when we start going into each one, you know what they are on TikTok and then y'all see them on YouTube. Okay. Number 1 is stability. Okay. If you're going to be taking notes, I'm going to say it again for y'all on TikTok because I know it's a bit of a delay on TikTok. Okay. I'm going to ask that y'all do me a favor while we're here. Do me a favor and go ahead and tap the screen. I'm going to give y'all a second to tap it up. Okay. Because we want to send this out to the FYP. So the people who need this type of information, they can get this type of information. Okay, we're not going to be sitting here hoarding info. That's not what we do. Okay, I know Leona doesn't do that. All right, that's not the way I was raised. That's not how I am as an adult. I always share, share, share. Okay. So with that being said, this is the time to share the live. This is the time to like. Thank you so very much, Sar, here for liking the live. Okay. If you are peeking in through the FYP or you have not attended any of my live streams before, you don't have to share yet. You can repost. It does the same thing. Okay. So there's that. And then let me do this. Boom. Add it to the story. Bam. All right, cool. Now, so the first one is stability. Hopefully y'all got that. Okay. The second pillar is security. The second pillar is security. I'm giving y'all a second because I know it's a bit of a delay. All right. Second pillar is security. Third pillar is growth. Third pillar is growth. All right. And then the fourth pillar is lifestyle. Fourth pillar is lifestyle. So hopefully y'all got all four. All right. We're going to go into one by one. First up, first pillar. Oh my gosh, these slides are so messed up on StreamYard. I don't like that. I don't like that at all. But okay, first pillar. I'm sorry, y'all. I'm gonna see how to fix that. I'll have it fixed next time. I'll mess with it before I go live on here using StreamYard again. All right, to double check because it's jumbling up the things on StreamYard. So first pillar I'm talking about is stability because we're gonna go one by one. Stability is about keeping life running with minimal stress or without stress if you could do it. Now I'm gonna tell you now, life be life, and so I don't see you not having any stress at all. But I will say you can minimize some of the stress when you are stable. Okay, this particular pillar, stability, is going to include knowing where your money is going. You got to know where your money going, dog. You can't sit here and talk about something. Well, yeah, I mean, I get paid, but I don't know where my money going. That means you don't have a budget. That's what that means. So you need to establish a budget. It needs to be a clear budget, one that you know, like I know how much money I have coming in. I know this without a shadow of a doubt. I know exactly how much money I have coming in, right? And then I know how much money I have going out. And I'm going to take it a step further to say when you do that, especially for me, I have a spreadsheet. It's like I call it the PC cash flow, right? But on the tab for my budget specifically, it has a tab or column where it says like the due date. So when is this particular monthly expense due? Right. So that way I know. And I personally have taken this step further and I put it in my phone because I have the calendar reminders. So that way I know, okay, hey, look, my Spectrum bill comes out on this date. Starlink comes out on this date. You know, lights come out on this date. The payment for the tiny house comes out on this date. You know, I know that every week and a half or so is when I need gas, unless we're doing a lot of driving, right? Outside of that, every week and a half, because you know, hey, thankfully my car takes has a really really good gas, you know, mileage. So I can go a week and a half if I'm just going around the city and I'm not going to like New Orleans or going to Baton Rouge or nothing like that. If I'm not going to, you know, and driving outside of the state or whatever, I can go a week and a half and I'm good, right? So that means I'm probably going to fill up 2 to 3 times a month, right? But I know, right? So knowing how much money you have coming in, knowing how much money you have going out, also knowing when that money goes out, that is key. That's part of the stability, okay? Covering your bills, making sure you pay them on time. Pay them on time. Pay your bills on time, ladies and gentlemen. I know, I understand that you may be attempting to cover something else. You may be taking a little bit from this to pay some. Been there. I'm ashamed of it, but I was there because again, I didn't understand money. I didn't have a good, solid money system. That's why I was there. That's why I could talk about it. Okay. So covering your bills, understanding your cash flow. Okay. How much income you have coming in. All right. What are the sources of income? Do you only get income because of your job? Are you getting income because of your job and your side hustle? Are you getting income because you have a rental property? Right? When does that come in? Are you getting money? I see you. I am Shanae. Welcome back. Right? Are you getting money because you have child support coming in? Do you get spousal support? What is the money? What is it? When is it coming in? What is the type of income? Okay, you got to understand that. And then in this particular pillar, the stability pillar, right, you're going to focus on creating breathing room. So I would say this is a suggestion, not a requirement, but it's a suggestion. So have you ever had like a light bill be higher than you anticipated? And you're like, oh my God, what the heck? Why is this light bill so high? What changed? And now they take out more because you automate your stuff, right? Your monthly expenses are automated. So now you're sitting here like, what the heck? Why? How am I going to pay for X, Y, and Z when my light bill is this amount of dollars and I've only budgeted for whatever it is? So you're going to create a little breathing room by adding just a little bit here and there each month. Okay? Doesn't have to be a lot. It could be an extra $10 here, $10 there, $20 here, $20, whatever it is. Okay, so that way now, if something is off, like light bills tend to be, okay, I was in Texas. Listen, the summertime in Texas, when we were living in Texas for them 3 years, yo, that light bill fluctuates. Because your AC is working overtime. You hear me? It's working overtime, right? So during the summertime, I already know every summer, light bill is probably going to be a bit higher. So we prepare for it during the, transition from winter to spring, that small window where we start putting a little bit here so that what we know, all right, when the summer hits, probably a month or two into the summer, we already know, okay, this is around about what's going to be our light bill because the summers along is hot in Texas. You know what I'm saying? When we were living there. Okay. So we're going to have a bit of a buffer. So I don't like the word emergency, but I put it on the slides for y'all because saying the word emergency, I don't know, it just does something to me. I don't like it. So, but that's you creating a bit of a buffer. So you have a little bit of money added every single month. So that way, if something like that happens, what I described, you're good because you have a little extra in there already. Okay. Now, when it comes to this stability pillar, okay, this stability pillar doesn't make you rich. I need to be very clear on that. The stability pillar, ladies and gentlemen, is not meant to make you rich. But I will tell you this, without that stability pillar, making sure that everything is covered, okay? Without it, nothing else is going to work. I'm telling you now, you're just going to be running in circles. You're going to be going back to step one, back to step one, back to step one, because you're going to be like, what the heck, man? I'm making this money, but I'm still living paycheck to paycheck. This is why. You don't have your stability bucket together. Now, with each one of these pillars that I'm sharing with y'all tonight, that equals a bank account. So your stability pillar, that should equal a stability bank account. So anything that is a monthly expense that comes out of your paycheck, you have to use your paycheck or your your money from your bank, from your business. All right. When you have to pay something out from the income that you have earned, that should come from one bank account. So if you want to nickname it stability, that's fine. Okay. Whatever you want to name it. But That's one bank account. Does everybody got it? Give me a thumbs up emoji in the chat if y'all got it. YouTube, y'all too. Okay, thumbs up emoji in the chat if you got it. So our first pillar is stability. We need to make sure that that is equal to a bank account. So all of our monthly expenses come out of that one bank account. Okay. So by the end of this, you're going to have a minimum of 4 bank accounts, but I'm going to give y'all a bonus one. All right. But at a bare minimum, you should have 4 different bank accounts. So number one is stability. So if when it comes to the stability, I don't know why I said stability. Stability pillar, okay? If every unexpected expense feels like an emergency, y'all, this particular pillar needs your attention immediately. Seriously, if when something comes up and you're like, oh my gosh, I can't cover this, or I gotta figure this out, I gotta do. If you're over here having heart palpitations and stuff, you're trying to figure it out, you're wrecking your brain, you're sweating, you're stressed out, or whatever, you got to work on this one. You cannot move to step 2. You can't move to step 3. You can't move to step 4. You cannot move forward until you have your stability pillar together. Not then. You got the bank account. You have all of your incoming income. You have that noted. You know when it's coming in. You know all of your expenses going out every single month. You know what day they're going out every single month. You have everything automated, and it's coming directly out of one bank account. Everybody got it. Okay. Now, second pillar. Let me change the slide. Second pillar for my people. That's security. Security, this particular pillar is going to protect what you're building. So you have your stability, right? So now the focus for you is to protect the money that you have coming in before you even get to step 3. The money that you have coming in, you want to protect that. So that way you can move to step 3. Well, how do we do that? What does this particular pillar include for us? Well, one is going to include, I'm going to say it one time and then I'm not saying it anymore. I'm going to say what I say. This is going to include your emergency savings. Okay. I call it my I got it fund. Okay. So if something happened, I can say I got it. If something is not covered and I got to pay for it medically, right? If something's not covered medically by TRICARE, I can say I got it. Okay. That's what my fund is called, right? That is held for Leona. That is held in a high yield savings account. Why is it held in a high yield savings account, Leona? Because high yield savings accounts give us more than our traditional savings accounts with our banks, our big banks, right? So you can find online multiple types of high yield savings accounts. Some of them require a minimum, some of them don't. I would say Google to see what works for you. Okay. But there are plenty. There's SoFi, American Express. Geez, I saw a whole bunch. Some of them require minimum, some of them don't. So I would say go Google best high yield savings accounts in 2026. There you go. And then go to each one, read the information, and see which one works or sounds great to you and for what you're doing. Okay. But the goal is for that high yield savings account to beat inflation. So you want to be able to earn 3.1% or higher with that high yield savings account. Cool. Now, the reason Leona uses a high yield savings account and not, let's say, my brokerage or something else like treasuries or whatnot, the reason I don't use those things is because if something happens and I need to be able to say I got it covered, well, I can't cover it immediately if my money is tied up in a stock brokerage account. That takes days to get into my bank account. I can't say I got it immediately if I put it into my treasury bills because there's a maturity date that's attached to those treasury bills, right? There's a maturity date attached to those bonds, right? See what I'm saying? And then even if I were to, sell early before that maturity date, I still have to wait a few days before I even get my money into my bank account. So high yield savings account for Leona is easy because one, I'm beating inflation. Two, I have quick access to my money. I could put the ATM card in the, I could put the card into ATM. I could pull the money out, or I could swipe the card and take care of that particular thing right then. Make sense? Okay, cool. Now, so this security pillar is covering that I got it fund. Okay, something come up, I got it. Number two is also going to include basic insurance awareness. Me and Shanae were talking about this yesterday. She brought it up that her mom was not able to share certain things about money with her. But one thing her mom did share was insurance. Get insurance, get insurance, get insurance. And I'm here to tell y'all, get insurance. It don't have to be whole life. It can be term. It can be term insurance, but get insurance. So that way your family does not have to stress out and worry about how they're going to cover your burial expenses and talk about doing fish fries and GoFundMe's and all of these things. I got it, y'all. It's not a conversation you want to have, but at the end of the day, it's one you need to have. This is a necessity to secure what you are building. Insurance is a way to secure what you are building. So this is one of the ways that you can leave behind assets and not just bills. Okay? You can leave behind something and not just bills. My mama passed away in the projects. She did not leave us anything. No money, no nothing. Right? My grandma passed away in the projects. Guess what? Her 6 kids that were still alive, the 6 kids that were still alive when she passed away, in 2002, right? They over here fighting over scraps. But guess what she did have? She had insurance. Lifestyle with Tag, welcome. Lynn, thank you so very much for liking the live, right? That's what she did have, life insurance. She had life insurance on my mama before my mama passed away, before she was diagnosed with cancer, right? So that's one thing my grandma did do. She had life insurance, but my grandma passed away in the projects, did not leave much of nothing. My great grandma passed away in the projects, didn't leave nothing. Nothing. Okay? So the reason I'm bringing up insurance is because at a bare minimum, instead of leaving behind bills that now your kids or your grandkids are going to have to figure out how to cover, guess what? Insurance is going to take care of that. Okay? The third part to this security pillar is one that was brought up to us last month, okay, when I did the Wealth Evolution webinar, right, with my friends that were going over stock investing for beginners and was talking about futures trading for beginners, right? But my friend that brought up the stocks, right, and was teaching on the stocks, she brought up beneficiaries. Y'all, that is this is another piece to securing what you're building. Why do you need to make sure that there are beneficiaries on your bank accounts? Because if something happens to you unexpectedly, the person that you are a partner with in life, whether you're married or not, you've been together and you're what's that, common law marriage, right? Thank you so very much, Wade, for the likes. Welcome. Happy Tuesday, right? This way, they don't have to guess, do I have access to the money to cover the bills that they have right now until insurance is paid out, right? They have it because you made them a beneficiary. What about your insurance? They should be made beneficiaries. What about your stock brokerage accounts? They have that on each one of them. Charles Schwab, Fidelity, Vanguard, all of them. They have the option where you can go in there and establish or identify a beneficiary or two. Cool? So if you have not done that, guess what? This is a part of the next step for you to make sure that you are securing, you're protecting what you're building today in 2026. Okay? And then the next part of this pillar, so I'm giving y'all 4 things within the second pillar, which is security. Okay, because these are the 4 keys to us growing and protecting our money in 2026. For the people who just joined, that's what we're talking about tonight. Not this. I couldn't get the board off. It wouldn't let me do it. It didn't give me the option to change my board. Okay, on TikTok. All right, but the last part is risk management. Oh my God. Oh my goodness, y'all. Again, security is the part that a lot of people don't dive into because it's not exciting. People don't like to talk about dying. People don't like to talk about that. Like, if I die, da 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 da. People don't like to talk about that. I hear you, but at the end of the day, you gotta work through that. It's past time to work through that. So the last part to this security pillar is risk awareness, risk management. Y'all, please stop over leveraging, getting into these markets. That means you're putting more money than you have, or more money than you're comfortable with losing, because it doesn't matter what a person says. None of this stuff that we put our money into is guaranteed. We're not guaranteed to go to sleep tonight in our bed and wake up tomorrow morning. So why in the world are we thinking that we are guaranteed to make money on any investment, no matter what the data says? I got it. The data is great. And it is showing for the past 10, 15, 20 years, it's been a return of this and that, but you're not guaranteed anything. There's a higher probability that you can get a return because the data says. Does that make sense? It's possible for you to get this return because the data says, but it's not guaranteed because nothing is guaranteed. Okay, so we need to make sure, as part of this particular pillar, when it comes to security, we need to make sure that we are paying attention to our risk versus our reward. Are we comfortable with the risk to put this money in here to gain this amount of money? Am I comfortable with it? If before I put the money in and I'm over here going through the numbers and I'm sitting here attempting to talk myself into it, and I'm trying to hype myself up, and I'm sitting here, I'm sweating, and I'm like, oh my gosh, and I'm going back and forth, and I'm having second thoughts and third thoughts and fourth thoughts, and don't do it. Lower your risk. Lower the amount of money that you're putting into it. Everybody got it? Lower the amount of money that you're putting into it. Okay? And then this way, you don't have to worry about blowing what you have built because you're paying attention to the risk versus the reward. All right, look, I got to tell y'all this. Now, this is why I said I'm gonna give it to you straight. I'm not about to sit here sugarcoat and beat around the bush and go down the street and around the corner and then come back and hopefully I'm telling you, security is why one setback can prevent. Well, let me see. If you're not secure, if you don't have your security pillar together, that can one mistake or one setback or one emergency can erase years of progress. However, if your security pillar, if your security is on point and you have your I got it fund, you have your insurance at a bare minimum, term insurance, you have your beneficiaries identified with every single bank account, every single stock brokerage. They know where the gold and silver is at. You have a trust, you have a will. When you have all of this stuff, you're practicing risk management. When you do that, now you don't have to worry about one setback erasing all of that progress. But here's the unfortunate part. Most people skip this one. And then they jump straight into growth, and then they wonder why one mistake wipes out every bit of gains that they've made. Because you can't skip your way to the big money. You can't. It don't work like that. Study the people with the big money. Study the people with the big money. Right? I was, but I had a conversation with someone, so they convinced me to stay. Yeah. I had a conversation with a person and they convinced me to stay. Then I had a second person say the same thing despite all the challenges. So if TikTok kicks me off, then they kick me off. But I'm gonna say what I'm gonna say. That's why I was gonna leave because they kept restricting me and all of that stuff, and it just was annoying. But I said, you know what? They'll just have to kick me out. I'm gonna say what I'm gonna say because I'm not doing anything wrong. All I'm doing is helping people. That's it. And I give disclaimers all the time too. So there's that. But welcome in. Welcome in. Thank you. I'm glad to be here too. Okay. So yeah, so I was gonna call, so I made sure you left us. Yeah. Yeah, they convinced me because I sure was like, I'm tired of this. That's why I retired from the army. I got tired of people telling me what I can and can't say, what I can and can't do. Now I'm freaking grown. I'm 43. You're not about to tell me what I can and can't say, especially in a country where they say we have freedom of speech. You know what I'm saying? And I sat here and risked my life for that too. Now I'm not about to do it. So I'm going to say what I'm going to say on this here app. I don't say anything that's leading to someone doing something illegal. I'm not saying anything that's telling anyone to do anything unethical or immoral. So therefore, I'm going to say YouTube. I'm going to say TikTok. I'm going to say link. I'm going to say bio. I'm going to say follow. I'm going to say all of that. And if TikTok kicks me off, they kick me off. I don't care. You know what I'm saying? I'm on YouTube too. There's that. So yeah, I'm not about to sit here and censor myself on an app. It's not about to happen. You know what I'm saying? So yeah, so that's why I'm still here. All right. So I do need to change my bio. So thank you for that, Sundown, because I do need to change my bio. So yeah, so security for us, I got it, y'all. This particular pillar it's not exciting. It's not, like, oh yeah, this is something I'm so looking forward to doing. I got it. I'm well aware. Welcome, Dre. Thank you so very much for liking the live. I'm well aware, but I'm gonna tell you now, this is the most powerful one that is going to help you to be able to secure that financial freedom for yourself and for your family. I'm telling you now, your security on point, stability is there. Now we can move on to the third pillar, which is growth. Okay, but you need to make sure that stability is there, security is there, and now we can talk about growth. Okay, because this is where we are making our money work for us. Everybody got it. So if you have a visual in mind, if you have a goal in mind, financial goal in mind, you don't have to type it in the chat, y'all. But I just want you to think about it real quick. If you know what your financial goal is for the end of 2026, by the end of 2026, this is what I want to have accomplished financially. If you have that in mind, but you don't have your stability, you're not stable financially. Well, you need to work on pillar number one. But you have pillar number one together, but you don't have all those things I mentioned together as far as security goes, right? You don't have your I got it fund. You don't have your basic insurance, which is term insurance. You don't have that. You don't have beneficiaries identified for all of your accounts, bank accounts, your stock brokerages, and on your insurance. You don't have benefits. Guess what? You need to get all of that together. You don't have a risk management plan. You need to make sure all of that stuff is done before you move to pillar number 3. Everybody got it? So I know you may have their financial goal in mind, but we need to make sure in order for us to get to that point, December 31st, 2026, we got to make sure 1, 2, 3, 4 are all done in their line and consistently done every single month. Okay? So in order for us to make our money grow and make our money work for us, we have to make sure 1 and 2 are done. Everybody got it so far. Thumbs up emoji in the chat if we got it. Okay? Thumbs up emoji in the chat if we got it. All right? So with this third pillar, this is what this is going to include. All right? Cool. I got you, Sundown. All right? This is going to include just basic investing. When I say investing, this is for my people who have a very low risk tolerance for putting money into the market. They're like, I got it. I know I should put I know I hear y'all talking about putting money into the stock market. I'm not ready for that yet. Okay. I'm not ready. Okay. So these individuals are more than likely going to put money into high yield savings accounts. They're going to put their money into treasury bills. They're going to put their money into bonds, right? Certificates of deposit, your CDs, possibly putting it into money market funds, precious metals. Okay. They're going to put their money into those things because those things to them for sure are much lower risk than getting involved into the stock market, real estate, crypto, creating a business. Okay, because people don't talk about that. Creating a business, folks sit here and tell you real quick, you need to create a business so you can make some money. I'm telling you now, it's not as easy as people make it seem. Okay, not everybody is profitable within their first year, let alone, well, I say within the first 5 years, let alone the first year. Okay, so to sit here and just tell somebody who's working a 9 to 5, you should just create a business, and then don't give them the nitty gritty, like the you know what I'm saying? Like, hey, it ain't as easy as people make it seem on social media. You working hours that you ain't working at your job. You know what I'm saying? So for my people who are low risk, this is gonna more so be your lane, like your treasury bills, bonds, things where the money is easily multiplied and it's a low barrier of entry, but also a low risk attached to it. There's still a risk, but it's a much lower risk than investing in the stock market, crypto, and things of that nature, right? Say creating a business sounds good until people that said that got you run out. Hello, and I think one day I'm gonna do like a story time on how I even got into business for myself because I was still in the army at the time, in New York, right? And it wasn't the way that people describe being an entrepreneur in the space that I was in, especially in finances. Like it just wasn't like they were not teaching you the stuff that you need to know, but they were quick to be like, yeah, because now you're going to be your own business and that you're an independent business owner and all of this stuff or whatever. It sounds really great, but they don't tell you all of the stuff that you have to do and the fact that you may not be profitable and how you should break down your money that you're earning in your business because all the money that you earn in your business is not yours. This is the stuff that they don't say, right? So for my people, when we talk about growing our money, okay, investing is one. For my people low risk, I told y'all more than likely you're going to be looking into treasury bills and bonds and things of that nature, okay? Before I continue on, I have to be very clear on this. Y'all, I am not a financial advisor yet. Okay. So anything that I'm sharing with y'all, especially when we're talking about multiplying our money, welcome, Jimmy. Okay. Especially when we're talking about multiplying our money. This is the portion where I have to say this a lot because I don't want anyone to say, well, Leona said to invest in this thing. No, Leona didn't say that. What Leona is saying is these are some things that you can research because these things have proven, according to data that is free and available to all of us to research and see with our own two eyes to multiply our money and grow it for us. Okay. But there are risks attached to investing in general. So each investment or each asset class has its own level of risk. You have to be aware of what it is and is that in alignment with your risk tolerance. Okay. And before you make any decisions, if you want to, say, you know what, I want to talk to a professional about this, I definitely highly encourage you reaching out to a licensed financial professional. Okay, so that could be a financial advisor, that could be a CPA, an accountant. You can even talk to tax strategists too, because more than likely, if you know a tax strategist, that tax strategist is going to know of or be a CPA, or they're going to know someone that is able to help you when it comes to helping you identify what should be included in your portfolio based on your goals. Okay, so I'm saying that because I want to make sure everybody is well aware. All right. So another part of this growth pillar is ETFs. Okay, these are exchange traded funds. Remember, when we had the webinar last month, she said it's pretty much like a bucket of companies that are in the same sector. Okay, so that's technology, that's healthcare, that's finances. There are all these different sectors, right? And they are in this particular bucket or basket. And now instead of, hey, I'm buying separate companies in with hopes that the data proves, to work in my favor and multiply my money. Well, if you don't want to buy Apple and then Google and then Amazon and all that, but you want tech, then you can buy tech ETFs or a tech ETFs. Okay. You can do that. Got it? But that means research. I got something for y'all, okay? If you want to get more information on that, on how to figure out where to start investing, especially when it comes to stocks, and also cryptocurrency, okay? I got something for y'all, so just stay tuned. If you can't watch this entire live on TikTok, y'all, I'm live on YouTube. The replay will be up and available to you for a certain amount of time. So I would say the faster you can get to watch the replay, if you can't be here the entire time, the faster the better. Okay, because it's not staying up. All right. Then of course that's getting into single company like stocks and of course cryptocurrency. Now the reason why I'm bringing these things up, even though right now I'm not a financial advisor, I'm not telling you what to invest in. But here's the key with this particular pillar: growth only works when stability and security already exists. So it means nothing for me to sit here and tell you, oh yeah, you can invest in these things. You can research these particular companies. You can research these particular cryptocurrencies. You can research these ETFs. You can research all of this stuff all day. But if your stability bucket is not taken care of, your security bucket is not taken care of, guess what's going to happen? You're going to put money into the market that you can't afford to lose. You're going to withdraw as soon as you make some money. And now you're back at square one. Why am I saying that? Because I did it. I did it. And I thank God that I have been delivered. Okay? But I'm serious. Been there, done it. For my people who are just joining, I'm sharing stuff that I actually did. Okay? I actually did this. Growth, y'all, is not about getting rich quick. It takes time. You're not going to get all of this overnight. It's not going to happen next month, right? It's about being consistent every single day, consistent every single week, consistent every single month. That's what it is. That's how you compound and you're able to elevate and grow your money, what looks like to you at a faster pace. But that's because every single month, that money is being deposited into those brokerages. Every single month, that money is being deposited into those crypto exchanges. Every single month, you're buying that gold and that silver. Every single month, you're doing X, Y, and Z. You're doing these things. Okay? Now, again, I got to say this before we move on to pillar number 4. Each one of these pillars should have its own bank account. So remember I said stability. That's where you pay all of your monthly expenses, right? That should be its own bank account. Nothing else should come out of there besides your monthly expenses, okay? The second pillar was security. This is your call it what you want fund. I call it my I got it money, okay? I got it fund. That's what I call it. Something happens that I'm not prepared for it. It's not expected. It's not a monthly expense. It's not a quarterly expense. It's not an annual expense. It's something totally out of the blue that my insurance doesn't cover or whatever it is. And I wasn't expecting it. My husband wasn't expecting it. Guess what? It comes out of my I got it fund. That is a separate bank account. And my I got it fund is in a high yield savings account so I can easily access it. The third pillar, growth, that's its own bank account. Why? Because I don't want to sit here and have to think about, did the money come out and go into these brokerages and crypto exchange and buy the gold and silver to buy the I don't want to have to think about that. I've automated all of my stuff. So that way, for me, for my investments, all of my money comes out between the second and the fifth out of one bank account. And the money that goes in there is according to my budget. So let's say for you, you're like, hey, I can right now, with everything I have going on, I can only afford, according to my budget today, I can only afford to invest 5%. Miss Martine, welcome. Happy Tuesday. Right? Good evening. Let's say that right now you're like, hey, look, I can only afford to invest 5% of my income. Okay, cool. So you make sure you automate 5% of your income to go into this particular bank account. This is not in your bill, your monthly expenses, your stability account. This is not in your security account. This is in your growth bank account. Okay, so that 5% is automatically taken out every time you get paid, and it is deposited into that particular bank account. Then you automate whatever you want to invest in every single month. You automate that to come out of that particular bank account. So now you don't have to worry about your monthly expenses being mixed with your investment and all. No, everything has its own lane and own purpose. Because what are we doing? We're giving our money an assignment. We're telling it what to do. Hey, thank you, Miss Martine, for the heart meet. And congratulations on being here for 1 month. Woo woo. Let's go. Okay. We're giving our money an assignment. We're telling it where to go. We're telling it what to do. Our money is our employee. Our money does not run us. We run our money. We tell it what to do. We direct it. We give it guidance. We control it. Does everybody got it? So in order for our money to grow, we have to give it the direction to tell it how to grow. So this is why it needs to have its own bank account. So that way, nothing else is distracting it. The money knows its purpose. I'm out here to multiply, because all of us in here have a place where we're going to multiply and bring back more. Bring back more employees. Everybody got it. Again, this is not about us getting rich right now. This is about us establishing a pattern so that way over time we can hit our financial goals, and we can go from that. What is it? Hold on. Let me give y'all this. Miss Martine. All right. She said, got it. So I'm going to give y'all this real quick, and then we're going to move on to the last pillar, right? So this is something I learned from one of my mentors in the stock market, Wall Street Trapper. This is from, I got the date on here and everything, y'all. May 5th, 2024. So this is almost 2 years ago that I was taught this. He said there are 6 phases of wealth. Y'all ready for this? Since we're talking about growth, the 6 phases of wealth. First one is net negative. Net negative. This is where you owe more than what you own. So you're in a negative. Your income is not enough to pay for what you owe, the debt that you have accumulated. That's net negative. That's the first phase of wealth. If that is you, then we already know we got to work on our stability pillar. Okay? You can't work on security and all. You can't do all of those things until you have stability in order. Okay? Then you can move to security. You can't even go to growth until you have stability and security together, right? The next phase of wealth, the second phase of wealth, is net zero. I'm reading it from, I got an index card, y'all. We're playing with me. Okay? I keep it. If it's important to me, I'm like, nah, this is a reminder. Where am I going? What do I need to do so I don't roll back? Okay? Net zero is what we own and what we owe balances out is zero. Okay? So let's say you bring in 5,000, but every month your expenses are 5,000, you're at zero. Got it? Hopefully y'all got it. I know TikTok has had a bit of a delay earlier. Hopefully that delay is over with. Okay, thank y'all so very much for getting us to 3K. Woo, woo, let's go. Okay, let's push that to 5K real quick. And let's get some more shares and reposts as well. If you have not shared this live yet and you're finding this helpful, go ahead and share it. If you don't know me and you like, Leon, I just been peeking in from the FYP, girl, I don't know you like that. But you can always repost, okay? It does the same thing. It tells the TikTok algorithm that people are interested in this live and they want more people to come in, and it's going to send this live out to the FYP so more people can come in, okay? So like, tap the screen, tap, tap, tap. That's one part. Share if you have been here before and you love what you're hearing. Repost if you have not been here before, you're not following me, but you love what you're hearing and you want other people to get it. Go ahead and hit repost as well and continue to engage. I appreciate y'all. Thank y'all so very much. Aries, God Award, welcome. Happy Tuesday. Okay, so I said net zero was the second phase of wealth, right? The third phase of wealth, working poor. I know of many people who are here. I know many people who are at net zero. I'm not saying any names, okay? And it's not to make anyone feel any type of way. This is about awareness, all right? I know many people who are at net zero. I know many people who are at working poor. Working poor is where the money that you make pays the bills, but you have less than $1,000 in your savings, okay? The money that you make pays your bills, but you have less than $1,000 in your savings, okay? That's working poor. Everybody got it. That's the third phase of wealth, okay? In order for us to get to pillar 3, to grow our money, we need to know where we are in the phases of wealth, okay? Number 4, the fourth phase of wealth is security. Security, okay? Fourth phase is security, all right? And that's when you work, when you're working to pay the bills, you have some form of savings and you have your I Got It fund established as well, okay? You got your I Got It fund. You have like savings could be like some buffer money. You know what I'm saying? Like, I just got some money. Some come up like there's extra. The light bill is a bit higher than we anticipated or what we've been paying in the past 3 months, right? The light bill is much higher. Now that buffer money, that savings, that can cover it because you have it. It's not necessarily an emergency because you know every month you pay your light bill, right? But you have a little buffer. That's what they were talking about. So you have money to pay your bills. You got a little buffer. I'll say that. Okay. But you also have your I Got It fund. So if something that is not monthly that comes out, it's I don't like saying it, but here you go. It's an emergency. Okay. It has to be taken care of today, right? Life or death, or you lose your job, you're furloughed, right? Now you have this particular fund available. All right, that's security. Now, the fifth phase of wealth is financially secure. Financially secure. Again, I did not come up with this. I got this from Wall Street Trapper back in 2024. I still have it with me today because I was like, this is really good to know, and I'm going to share it with everybody. Okay, I wrote it on the index card in 2024, and I still got it to this day. And I wrote it in pencil. And I normally don't write in pencil, but that's all I had. But I need to write this down. Okay. Fifth phase is financially secure. This is when you have your savings, you have your I Got It fund. Okay. You got your I Got It fund. Y'all, this is when you're talking about like 3, 6 months, 9 months, right? In your I Got It fund. Okay. You're investing, but your investments do not fund your life yet. I know plenty of people who are here, financially secure. They got all of that. It's just their investments are not paying them on a monthly basis where they can live off of their investment, meaning dividends. Okay? Got it? So that's the fifth phase of wealth. Wade gave me the thumbs up. Okay, cool. That's the fifth phase of wealth. The final phase of wealth, the sixth phase of wealth is financial freedom. This means that money becomes a surplus for us. Congratulations, y'all, on hitting 4K. Let's get to 5K. Let's get it. Let's get it. Keep liking the live. I appreciate y'all, right? Money becomes a surplus, okay? The money that is invested, you can now live off of it. It is paying you every single month. All right. So the terms now go from savings and investing to having liquidity. You stop talking about saving it. No, I need liquid. I need liquid, or I have liquid, right? Jazz, welcome. Thank you so very much for liking the live. Everybody got it. So those are the 6 phases of wealth. So in order for us to even get to pillar 3, we need to identify where we are today. Which one of those phases are you at today? Okay. If you want to type it in the chat, you can. You don't have to. Okay. But it's either phase 1, net negative, phase 2, net zero, phase 3, working poor, phase 4, security, phase 5, financially secure, phase 6, financial freedom. Okay. I can count on one hand people that I know, like have a phone number for, that are at financial freedom. Okay. Welcome, Mr. Howard. Happy Tuesday. So this is not to say that that's bad or great. I'm just saying the number of people that I know that are at phase 6 is small. But the number of people that I know are at phase 2 to 5 is much bigger. Okay. That pool is much bigger than the people that I know that are in phase 6. All right. So if you know where you are, thank you, Miss Martine. Right. So if you know where you are now, what we're doing tonight is helping you to figure out how to fill in that gap so you can get from 3 to 4, from 4 to 5, and then for some of us, from 5 to 6. Okay. I know everybody here wants to be financially free, where you can sit back and you've done all this work and now your investments are paying you. You're living off of the money that you have put work in. Okay. So that was the 3rd pillar, y'all. Growth. This is where our money is working for us. We don't work for our money. Our money is working for us. Okay. But we will not focus on getting rich fast. That's not it. This is not Speed Racer. Y'all, for my people who are millennials and older, y'all know what Speed Racer is, right? Okay. We are slow and steady is going to win the race because we're going to be consistent. We're going to compound with time and with our money. Cool. 4th pillar, y'all. This is the last pillar, and then we're going to move on to what we should be doing as beginners before we talk about putting money into the market as an investor. Okay. So 4th pillar, I got y'all on YouTube. Okay. 4th pillar is lifestyle. The purpose of this is for us to be able to enjoy life. We got to enjoy the journey, y'all. I've listened to a ton of people, okay, that have made millions of dollars. I'm talking about 50 million, 100 million. I've listened to them. I've been in rooms with them, and they've told these stories over and over again. And they talk about how, once you get to a certain point, it's no longer about how much money you can make. It's about impact, or it's about passing it on. It's about seeing the next millionaire, being part of their journey. It's about educating people. It turns into purpose for them, right? They want to have a purpose. But the beautiful part for them is they live the life that they want to live. I don't know if anybody watched the interview with Jill Scott, because she has an album coming out, right? And it was on Angie Martinez's podcast. And she said, oh man, I should have wrote it down. I'm gonna write it down because I love it. And I'm like, I want to teach this to my kids, right? Because I didn't have this. But the way that she phrased it pretty much was like, you work hard in your 20s. What is it? She said you work hard in your 20s. You work smarter or something like that in your 30s. You work like intentionally in your 40s or whatever. You work how you want to work in your 50s, and you work if you want to work, or whatever, in your 60s, something like that. I know I probably butchered it. I'm gonna go back and watch it. I'm gonna write it down. But When she said that, y'all, for me, I was like, that's it. That's it. That's how we if we could just see that and share that with kids earlier, now they know it's grind time. It ain't no you coming into adulthood and you just being like, well, I got time. No, you don't. Get it. Go get it now. Because if I would have known this stuff, if I had the type of people around me when I was in my 20s versus just partying, truth be told, versus just partying, I know that I would have been like well beyond where I am today. Not complaining because I'm where I'm supposed to be, because now I could tell people like, look, these are the mistakes I made. So the reason why I'm giving y'all these 4 pillars is because these are mistakes that I made. I didn't understand and I wasn't taught until later on in life. And now I'm like, I want to be able to, pass it on so that way people can hopefully fix their situation today, but also pass it on to the younger generation so that way they don't repeat the mistakes we made. Because our parents didn't know, our grandparents didn't know. But now we know, let's make it better for them. Set them up for success, right? So this particular pillar, y'all, I want to be clear on this. This isn't last because it's not important. It's not that. Okay. It's last because at this point it'll be sustainable. You'll be able to travel when you want to, how you want to, the frequency in which you want to, right? You'll be able to have fun. You can have these different experiences and memories with your kids, your grandbabies, your nieces, your nephews, your favorite cousins, by yourself, whatever. You'll be able to give in abundance to causes that you are passionate about, right? You have options now. This is when you have options, right? So when it comes to this lifestyle bucket, I got to tell y'all, there was a point where I felt when I was making my mistakes, okay, I felt guilty in a sense. Like I shouldn't be having fun when, you know what I'm saying? I'm over here budgeting and I'm attempting to invest and everything. Thank you, Miss Martine, for the Go Popular. I appreciate you. Right? It's not like I felt guilty in a sense, but I learned, of course, in being around and listening and learning from people with way more money than me, right? No, you shouldn't feel guilty. You just need to set yourself up so that way, when you do put money into this particular bank account, because this is going to be its own bank account as well. Now I don't feel guilty for spending and buying those shoes that I wanted. I don't feel guilty for paying X amount of dollars to get my hair done. I don't feel guilty for going to get a facial. I don't feel guilty. Now I'm not going to feel guilty because my stability bucket is taken care of. My security bucket is taken care of. Every single month, I'm multiplying my money because I'm investing in multiple things. I'm diversified. So if the stock market is crashing, then I should be good because I hold gold, I own physical gold and silver, because I trade, because I hold cryptocurrency, right? Like I should be good if cryptocurrency market is down, which it is right now, right? The stock market is still doing pretty good for what I'm holding. The companies, the ETFs that I hold, they're still in the positive, way up, right? So having all of those, boom, now I don't feel guilty. So now I can put money into this particular bank account so that way I can live life according to right now my budget, but eventually I can live life how I want to live it, because my money is constantly growing and I'm able to live off my investments. Does that make sense to everybody? Give me a thumbs up emoji in the chat if that makes sense. Thumbs down if that doesn't make sense. So with this particular pillar, y'all, that's a separate bank account. So that's 4 bank accounts that you should have. One to pay your monthly expenses. That's your stability bucket. The second one, stability pillar, my bad. Stability pillar. Your second bank account is for security. This is like your I got it fund. If something happens that you are not prepared for, is not part of your monthly expenses, is not part of your like services for your car or tires or replacing the house, something in your home, repairs or whatever, that's not an emergency. Okay. That's stuff that is gonna have to come out at some point, but it's not every single month. That's not an emergency. An emergency is you're furloughed, so you're not getting paid. You lose your job completely, you're not getting paid. There's a medical expense that is not covered by your job's insurance. So now you have to come out of pocket. That is an emergency because that's not something that you can prepare for. You're not naturally prepared for every single month. Make sense? So we don't want to confuse what the I got it fund is for. Okay? So now that's a second bank account, and that's typically going to be in a high yield savings account, giving you a return of 3.1% or higher. Then your third bank account is for your investments. That's your growth pillar. So all the money that you are investing every single month, it goes into one bank account, and then your money is auto drafted from that bank account, not from a bank account that other money is coming out. No. That bank account only has money in it for your investments, period. Nothing else. Do not commingle this because we're giving our money assignments. It has its own lane, so it know what it's doing. The fourth one is for us to be able to live our life. We spend our money how we want to spend it with this particular bank account. Now, granted, that money today, that amount that you put in it today may not be a whole lot. So what? Don't focus on the amount. Focus on the fact that every single month I'm putting that $100 into that lifestyle bank account. I'm putting $200 into that lifestyle bank account. I'm putting $500 into that lifestyle bank account. If it's $50, dollars, $50. Put $50 in there. If it's $20, it's $20. Put that $20 in there. Does that make sense? Don't stress about the amount. Think about, I'm doing this every single month because it's going to compound over time. Cool? Wade got me. Jed said, yep, like in the live. I appreciate that. Okay? You got the 5K. Good job, y'all. Good job. Now let's keep it going. Keep it going to 6K. Okay? So when it comes to this lifestyle pillar, y'all, what I really want y'all to know, at the end of all of this, wealth should support your life. The money that you are multiplying, it should support your life, not replace anything. That's why we have these separate bank accounts. I'm going to give y'all a fifth bank account that you should have if you don't have already. So remember how I said we have one for our monthly expenses, right? That's the stability. We have the second one that is security. That is our I got it fund. Something come up that we're not prepared for. It's not part of our monthly. It's not part of our quarterly or annually expenses, right? That comes out of there. There's another bank account that you're going to have that's part of that security pillar. And that is a miscellaneous bank account. This is going to cover those expenses that don't come out every single month, but they come out probably once a quarter, once a year. So if you have a vehicle, you drive a vehicle, what has to happen every single year in order for your vehicle to run the way it's supposed to run? Type it in the chat for me real quick if y'all can. What has to happen at least once a year in order for your car, your truck, your SUV, your tractor to run the way it's supposed to run? Type it in the chat real quick. A service. That is absolutely correct. Now, not everybody has a warranty. So guess what? If you don't have a warranty, you have to pay for that out of pocket, correct? You know that at least once a year, at a bare minimum, I know mine is every quarter. So I have to get 4 services a year with my Benz, right? So I know that. So 4 times a year, I have to pay somewhere between $800 and $1,500 for a service. So I already know, depending on the type of service I'm getting, I already know I need to have at somewhere between $1,800 to $1,500 in this miscellaneous account every single quarter to be able to pay for my service. That makes sense? I know I'm going to need new tires at some point. I may not need it every single year, but guess what? I know I'm going to need them at some point. So guess what I'm going to do? I'm going to put money into this miscellaneous account. So that way, when I do need tires, I'm not sitting here like, oh, shoot, I'm going to pull it from my I got it fund. No, 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 no. I know I'm going to need tires. Let me put the money in here so that way I have it. If you're a homeowner, you don't have a property manager, right? Because you live in it. You own that home, right? Guess what happens when your dishwasher breaks? What do you have to do as a homeowner? Type it in the chat real quick. If you're a homeowner and your dishwasher breaks, what do you have to do? You got to go pay for that. You got to get the part, or you got to get the person. You got to pay for the person to come check it out. So you got to pay for that. And if there is a part that you need to get for them to install it, guess what? You got to pay for the part and for the install. That's money that has to come out. But you know that you own a home and you're going to have to replace things eventually. So that's what the miscellaneous account is for. That's your fifth bank account, y'all. Everybody got it. So at a bare minimum, we should all have 5 bank accounts. So that way we're not commingling money. What's going on? Boom! What's up, BK Crypto? What's up? Brown Sugar, welcome. Happy Tuesday, y'all. Right? So we're not commingling funds. All of our money has a specific assignment. One set of our money, they know that they're just going out here to make sure our life is good. Our needs are met. They know that's their assignment. Cool. The other ones, they know that their assignment is to be there in case something happens that we're not prepared for. So they're going to multiply in that high yield savings account. They got it. Boom. Right? The next one is that growth. This one knows, hey, we're going out. Our assignment is to go out and get more people, more money like us. We bring back more. We bring back more employees. Right? That's that account. So the money in this account, they already know their assignment. All of them in this account know they're going to make more money. We need to bring back more employees for Leona. We need to bring back more money for Wade. We need to bring back more money for BK Crypto. We need to bring back more money for Ms. Martine. Got it? They know what their assignment is. Then the ones in our lifestyle bank account, they know that our sole purpose is to be ready and available so that way Leona can be happy and enjoy life. So Wade can be happy and enjoy life. So BK Crypto can be happy and enjoy life. They know their purpose. That fifth bank account, they know that their purpose is to cover expenses that don't come out every single month. We're ready and able. When you need to get new tires, we right here. Go ahead, put us to work. We're going to get you those new tires. Oh, your AC broke and you're a homeowner, we're ready to go out here and get you that new AC unit. Does that make sense to everybody? Okay? So you should have 5 separate bank accounts. You cannot go from pillar 1. You can't go from stability to growth. It's not going to work. You have to have stability. You have to have security. Then you can move to growth. That makes sense. Okay? So those are your 4 keys to growing and protecting your money in 2026. Now, for my people who are like, man, well, I'm a beginner. Like, I haven't really invested like that. Like, I put my toe in there, but I don't really know what I'm doing, Leona. Okay? I'm going to give y'all some order of operations. I'm going to give you an SOP, standard order of operations, right? My military folks, here go your SOP. Okay? Here we go. Number 1, I need you to understand your cash flow. You need to know how much money you have coming in, how much you have going out, when it's going out, when it's coming in, and also the type of income that is coming in. You need to know all of that. Okay? That's your first order operations. You cannot go do anything else. You cannot pass go. You cannot collect $200 if you don't have that. Got it? So we need to understand cash flow, number 1. Number 2, as a beginner, I need you to do these things in order. I need you to create stability. So if when I went over the stability pillar and you're like, nope, I ain't got that. Nope, I ain't got that. Guess what? You can't talk about security until you get stability together. Cool? That's your second order of operations. Third, now you're going to work on your security. You're going to build a small safety net. Okay? Now you're going to build a small safety net. This is when we talk about, our security. We have our I got it fund. We have our miscellaneous account for the things that come out once a quarter or once a year or whatever, or every other year or something like that, but we know it's going to come out. Okay? That's part of our security. That's part of us building our safety net. You're going to have a little buffer as well. So if your light bill is a bit higher in the summer, well, you already have the money, the additional money in there because you were mentally prepared for it, and you put the money in there little by little every single month or every single paycheck. Got it? Number 4, the fourth thing you're going to do is start learning about investing. I didn't say put any money into any market. I said start learning about investing. Go listen to the financial podcaster that you love the most. Okay? It doesn't have to be just one person. There are multiple people I listen to in the stock market. There are multiple people I listen to when it comes to cryptocurrency. There are multiple people I listen to when it comes to real estate. Now, is it a whole lot of them? No. The most I listen to in one particular sector is 3. That's it. I don't listen to more than that because I feel like if I have more than that in one, like when it comes to the stock market, there's only 3 people that I listen to when it comes to stocks. Consistently, there's only 3 people, right? When it comes to cryptocurrency, there's only 2 people right now that I really listen to consistently, religiously, faithfully. There's 2 people, right? When it comes to real estate, there is 2 people right now that I listen to consistently as it pertains to real estate. Okay? That's Leona though. But the point is, don't say I got to start investing right now. I need you to start learning. The more you learn, and then you start creating a plan, because now you got your stability, you got your security. Now, as you've learned, and now you can start to grow your money. Okay? But I would always stand by this, y'all. Get with a licensed financial professional when it comes to you putting money into the market. Before you put a dime in there, okay? Get with a licensed professional. Right now, I'm not there, but when that time comes, trust me, y'all are going to know this year. Okay? Once I have my licenses, y'all are going to know. Y'all will be the first ones. Well, y'all won't be the first ones. Y'all will know. Okay? All right? Then the last thing, this is your order of operations for my beginners out here. The last thing is I want you to take small, consistent action. Every day, there should be something that you are doing to push you forward to get into phase 6 of wealth, which is financial freedom. Okay? That's it. That is it. That is your order of operations. Here's the thing. There are common mistakes that I see all the time. All the time. Folks jump straight into the riskiest asset. Crypto is very, very risky. And if you're not accustomed to, or you're not aware or comfortable with how the market moves in general, not even just crypto, I'm talking about how the financial markets move, the cycles that we have and everything. If you're not comfortable with that, jumping into cryptocurrency first may not be the best move. You may need to get into something that's less risky, right? You may need to get into some, treasuries or money market funds or something first. Precious metals, I mean, shoot, gold, silver, and everything has been on a massive run since last year. Like gold started running in August of last year, right? and it just now pulled back. So last month. So, right? But you gotta start where you're comfortable, and then you graduate and move on to something else. Don't do something just because all of these people are talking about it, because it's trending, because it's in the headlines constantly or whatever. No, don't do that. Roll with what you are comfortable with and your level of risk. Okay. Then this is another mistake. People start investing before they even have their, or at least started their I got it fund. Y'all, you can't be doing that. I got it. You may not have 3 months or 6 months of it, saved up yet. That's not the point. The point is, I need you to at least have something in there. At a bare minimum, have $1,000. You know what I'm saying? At a bare minimum, have $1,000 in your I got it fund before you start investing. So that way you can cover something. It may be small, but you can cover something that's an emergency. And you still do that every single month though, right? Whatever the frequency is for you, whether it's twice a month, 4 times a month, or just once a month, whatever it is, but you still do that. Now you can start incorporating the investing. But investing without already having your I got it fund set up, you're setting yourself up for failure. I'm telling you now, because I did it. I'm not telling you this just because it sounds good or I'm trying to, put fear in you. No, I'm telling you because I did it. That was a really bad mistake. And I learned from that. And that's why I'm telling y'all today, make sure you have your I got it fund set up with at least $1,000, at a bare minimum, $1,000. Then you can start incorporating the investing after you've been studying. Okay. Another mistake I see, people be chasing these returns, right? But they don't understand the risk associated or attached to putting their money into that particular asset. Again, I'm saying this because I did it. All right. Now you don't need, and I gotta say this too. You don't need a lot of money. That's something else I thought. You need a whole lot of money in order to, I thought you had to have a lot of money to invest in gold and silver. I learned that you didn't have to have the, tens of thousands of dollars to buy gold when you could buy grams. Who knew? I didn't know that until I was talking to a millionaire. And I was like, no, you don't have to buy a kilo. You didn't have to buy an ounce. You could buy grams. I was like, word? I didn't know that. Well, where can I get it from? Oh, do this. And what I do, I tell people, research. This is just a suggestion. I'm not telling you what to do. This is a suggestion. If you want to invest in physical gold and silver, I always tell people a suggestion is research, Google gold and silver dealers near me. Okay? Gold and silver dealers near me. Google that. Go to that particular company, right? That gold and silver dealer, their website, and then look at reviews. Okay? Look at reviews on customer service. Look at reviews on, if anyone has been sold some gold that is not real or pure gold, right? Because my hometown, they found that there was a gold and silver dealer that was selling fake gold. Okay? And was stealing the diamonds and stuff. It was just a whole scandal, right? But he had been in business for well over 30 years. And he finally got busted. So look at the reviews. Then after you look at the reviews, if everything checks out, reviews are good, no issues there, I say go to the actual gold and silver dealer. Look at where it's located. Go inside the building. Ask questions. Okay? See how their customer service is up front and in person. What are the fees attached to said purchases or selling? Right? How knowledgeable are they about precious metals? Yeah, I'm telling you. If anything, now get on ChatGPT and tell ChatGPT to give you some questions you should ask a gold and silver dealer, because this is your first time considering purchasing gold or silver. And I want to make the right decision before I purchase. I'm going to this dealership, blah, 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 or this gold and silver dealer, blah. Like, give me some questions to ask them. And then if they give me these type of, give me some potential answers to look out for as a red flag. You know what I'm saying? Like use Gemini, Claude, whatever, all these AI tools out here, y'all, we got options. Okay? We have options. There's no excuse for us today in 2026. All right? So you don't need a lot of money. You just need a clear starting point. I gave that to y'all. I gave you 5 things in order to do as a beginner before you put money into any market. If you've already put money in the market, but you know that these things are not done, guess what? It's okay. You don't put no more money in it though. I need you to get back, you know what I'm saying? Rewind and go get these things done. Okay? So these small steps, when done consistently, y'all, will always beat big steps done randomly. I'm telling you from experience. Okay? Now, for my people who are like, okay, I heard you, but I need to know, like, is there anything that I can like refer to that's gonna give me a step by step on that? I have something for y'all. You don't have to do it if you don't want to. But I have a beginner investor guide. You can get it on TikTok. You can click the link in my bio. It's titled Beginner Investor Guide. You do not have to purchase if you don't want to. This is for my people who like order. I'm that person. I do step by step, right? We used to do on the job training. So it was step by step. This is what you do according to your job description. Boom, boom, boom. When you can do this, now you move on to this. When you can do that, now you move on to this. When you can do that, now you won't. That's how this is designed. Okay. So what this guy does is it pretty much bridges the gap between understanding and execution. All right. That's what it's going to do. So if you want to have access to that, you can click the link in my bio on YouTube, y'all. It's in the description of this video. So if you're thinking like, okay, this stuff is finally starting to make sense to me, but I still don't know what to do next, this is actually the guide for you. Okay. So I've created this beginner investor guide. It's going to help you to know where to start. So it's going to show you where to start. It's going to help you to avoid some of those mistakes that I made, that I've been talking about on here, and some that I have not touched on yet. It's going to explain investing in certain asset classes, simple and plain, okay? It's not a whole bunch of jargon that you're not going to understand, terminology you're not going to understand, but it's also designed to help you build confidence without feeling like, oh my gosh, this is too much and being overwhelmed, okay? This guide doesn't make you aggressive. It just makes you informed. Okay. Thank you, Scott, for sharing the live. All right. It makes you informed. I say this a lot because there are people who have not been on any of my lives, but I remember listening to Kim Kiyosaki one time. She was doing an interview with somebody, and I'm not really a fan of Robert Kiyosaki. However, okay, his wife made a good point. She said the worst investor is the uninformed investor. You're going to lose the most money. You're going to make the most mistakes, and you're probably going to just fade to black because you are not in a position to recover. Okay. So this guide is what's going to help inform you on things to research, assets to research, ETFs to research, cryptocurrencies to research. Okay. It's going to give you that. It even talks about credit, y'all. Debt reduction plan, y'all. There's a whole checklist that you can do in 15 to 30 minutes or so, right? In 2026 to help get you on track. So all the stuff that we talked about tonight is going in order to help you put your plan into place. Okay, tailor it to yourself. All right. So if tonight raise your awareness, your eyes are now open. You're like, okay, I know where I am. I know which phase of wealth I'm in right now. I know which pillar I need to work on. I know where I want to be by the end of 2026. I have my meat and potatoes and everything. Now it's time for me to execute. This guide is what's going to give you that clear direction. Okay. Now, for my people who were like, I need some steps specific real quick before we close it out. I need some steps. First thing I want you to do, this is kind of like some homework, okay? These are your next steps as well. This is a little homework, all right? Wade, I know you don't like homework, but here it is. All right. Number one, I want you to identify which pillar you need to work on first. Is it the stability? I knew it. Is it the stability? Is it the security pillar? Is it the growth pillar? Is it the lifestyle pillar? Which one is it? I need you to identify that one. Okay. Number two is only going to apply to the people who need help to create a plan to improve step number one. Okay. So step number two, for my people who need a plan to help them create, they need help creating a plan to accomplish step number one, you can now utilize the beginner investor guide. Okay. Again, that's located in the bio. Okay. For y'all on YouTube, you can just click the description in this video, the description box in this video. Now, step three, if you don't need the guide because you're like, nope, I know exactly what I need to do. I know which pillar. I have my action steps because you gave it to me in here. I know specifically what I need to do. Okay. Because I've done these things. Those things didn't work. I know exactly what I need to do. But guess what? I need you to find a responsible accountability partner to help keep you on track. Got it? So if you're like, I don't need the guide, I know what I need to do. I need you. Your next step is going to be to find a responsible, somebody who's good with money, somebody who is trustworthy, somebody that's going to be like, yep, I got you. Where you at with this thing, right? They probably going to join in with you too, okay? Because we all can make improvements in our finances, all right? So Wade said, you, all right. Okay, so you have my number. You just let me know what it is you're doing, and then I got you. Okay, I got you. Right. So with that being said, find a responsible accountability partner. All right, to keep you on track. So that way, December 31st, 2026, every single person that has been here either live or watched this replay, December 31st, 2026, y'all should be in my chats. Y'all should be in my comments like Leona. We had that doggone live session in February. And guess what? Girl, you'll be proud of me. I want to hear stuff like that. I want to hear like you have hit some of your goals. You may not hit all of them. You may hit all of them. I want to hear that. I want to hear that. I love hearing stuff like that. Okay? So those are your action steps. That is your homework. Okay? Did this help somebody today? Did y'all learn something new? If y'all learned something new, give me the thumbs up emoji in the chat. Real quick. If you learned something new tonight, or not even necessarily just something new tonight, but learn something that you've overlooked. You used to do, but you found, oh, shoot, I haven't been doing that. That's why this has happened. Okay, I'm back on it. Okay? If you have learned something new or whatever it may be, give me the thumbs up emoji in the chat. Wade lit it up with the I love it. I love it. Okay? So I'm going to give y'all a quick recap. This is what we talked about tonight. Miss Martine too. Okay? I love it. I am Shanae. Hey, let's go. Let's go. I love to see it. I love to see it. Okay? So tonight we talked about why investing may feel confusing. I gave you the 4 pillars of wealth evolution according to me, Prosperity Calls, right? Thank you so very much. I am Shanae for the rose. I appreciate you, right? I gave y'all some beginner steps, your order of operations. So now you know what to do. I even threw in the 6 phases of wealth for the people who have missed that when I talked about it last month. Okay, I even put that in there. So that way y'all know where you are and then your next step, your next phase, right? Okay, and I even talked about the beginner investor guide. I broke that down to y'all. Okay, now here's the thing. This is what I want to leave y'all with. All right, because we're about to wrap and I'm about to get home to my family. So this is what I want to leave y'all with. I want to leave you with this. At the end of the day, wealth isn't built on one decision. Okay? It's not built on one decision. It's built through alignment. It's built through structure, which is what we have talked about over and over again. And it's built through consistency. Something else I have talked about over and over again, not just tonight, but every time I go live. Okay? You're not late though. I don't want you to feel like, oh shoot, I'm too old, or I've been doing these things for so long, whatever. Listen, I got it. We all have made some mistakes financially because we didn't know. Remember, y'all, this is not 100% on you. This is a system problem. It is. It is systemic. They have failed all of us because they know how much money impacts all of these different areas of our life. Our healthcare, our education, our jobs, right? It impacts how we live life, enjoy life, or feel like it's hell on earth, right? All of this. They know this stuff. And they're still not doing anything to change that. That's why we have to do our part. Okay. So you're not late, you're right on time. If you're watching me live, if you're watching the replay on YouTube, you are right on time. Because now you have a foundation to build on. You have a whole framework to go off of. You have a guide. You have steps. You have order of operations. You now see much clearer than you did before today. And that is going to help build your confidence. Because guess what? Confidence creates what? Action. Confidence creates action. And then guess what? Action creates evolution. That's why it's titled The Wealth Evolution, Overcoming Financial Illiteracy. Okay? So I want to thank y'all so very much for sticking with me for these almost 2 hours. Okay. If you weren't able to watch the entire thing for y'all on TikTok, I want to let y'all know it is on YouTube. That's Prosperity Calls on YouTube. Prosperity Calls on YouTube. You can go watch it, the replay on there, and you'll be able to get all the information. But I'm telling y'all now, you need to watch it fast because it's not staying up the entire time. Okay. It's not going to stay up the entire time. You're welcome, Miss Martine. So Prosperity Calls, go over there, check out the replay, give it the thumbs up, subscribe if you haven't subscribed yet, hit the notification bell if you haven't hit the notification bell yet, so you know when I'm going live. So if you can't catch me on TikTok, but you're on YouTube, then that's what you can do. You can catch me on YouTube, okay? So that is it. Thank you so very much, y'all, for trusting me to be with you on this part of your journey as an investor, whether that's crypto, stocks, whatever it is. I really do pray that you get all that you desire, and you are evolving, you are thriving, and you are financially free before you leave this earth. Okay? All right. So I'm going to leave y'all my favorite quote, and that is from the legend. His name is Arthur Ashe, and he said to start where you are, use what you have, and do what you can. Y'all have a great night, and I'll be back on Thursday night, 7 p.m. Eastern, 6 p.m. Central. I will be doing crypto one-on-one for beginners. Okay. Y'all have a good one. I'll see y'all next time. Bye, y'all.